I got an email from Live Rent. I get a lot of messages from them since I worked with them. They've been really helpful in sending us early data. Here's one of the things they've noticed. Average rent for furnished and non-furnished units in the GTA is the same. Wow. Good morning, investors. Bradley here from Watson Estates, and you're listening to the largest, fastest growing podcast for Toronto real estate on iTunes, Spotify, and Google Podcasts. With all the craziness we've come through COVID and the housing market, is buying a property even worth it anymore? We're going to discuss the pros and the cons, the reason why market could go up, why it could go down, and really let you be the judge of that. Then we're going to discuss where should I buy real estate if I want to in Canada in 2021. We're going to look at a Money Sense article talking about where is their biggest opportunities, where's the kind of up and coming cities with the biggest upside potential. But also I want to look at other articles talking about movement, where people are going. If they're leaving Toronto, where are they ending up? And are we preventing sellers from selling? If moving up the property ladder is what gets everything going, it supports us through taxes and really allows for that entry-level home to open up. If we're preventing sellers from moving, that could pose a problem. We're going to discuss what the numbers have to say about that. But happy Canada Day, folks. I know there's a lot of pushback right now on celebrating Canada Day, but I think Canada is worth celebrating. In fact, based on these real estate price gains, I think sometime in the future, Canada will rule the earth. And then you'll all be sorry. Get it? Because we'd all be one and the same. But please like and subscribe if you haven't to our channel, especially if you love Canada here on Canada Day. We're going to get into our very first topic. Is buying a home even worth it anymore? We're going to start off with a Better Dwelling article that reads, Canadians asking Google, quote, should I buy a house is now surging. Apparently, a lot of people want to know if this is the time. In fact, Canadian homebuyers are soul searching, asking a higher power for reference, that is Google. And Google has seen a surge of activity to the question, should I buy a house? The takeaway, there's a surge in people wondering if they should buy a home across Canada right now. How long it takes them to buy after that query appears to be more of a mystery, though, because we can look up and see people are genuinely interested in whether they should buy or not. But I think it really depends on what the answer is to that question that they ask. So today I thought, you know what, let's try and answer that question for you guys, allow you to make that opportunity as an investor and a broker myself. I like to help people get in the market or at least come up with the right decisions for themselves. I think this is a great platform to do it. So can we become the number one market on the planet, or is it all make-believe? Let's go through some of the arguments. Should be the rise and the fall. We're going to start off with arguments for a rise. Looking at just some of the recent articles over the last week. So 2021 has momentum. Point number one. John Pisales had a Twitter post that said average home in Canada is appreciated, listen to this, 38% in 1 year. That's from under 500,000 to 688,000. Many in the real estate and mortgage industry were raising red flags about this in 2021. Myself included. We were told not to worry. Everything is fine and driven by fundamentals. But clearly they got it wrong. But history is often a good indicator of future, not in every case, but it would be a bit of a baseline. And that's the way we want to start today. Reason number two for the rise, the current cool down could simply be seasonal. So yeah, maybe your realtor saying, you know what, things are cooling off a little bit, but guess what? They do every summer. Maybe this year just happened a little sooner. Looking at the Globe and Mail article today, many of Toronto's young urban dwellers are reveling in the city's reawakening and putting weighty real estate decisions on hold for now. They talked to Riley Boko of Cloud Realty. Here's what he says. Canadians treat summer differently. Just try getting a patio reservation. Where do you think the priorities are? Before you say we've disregarded real estate, I think it's just a preference at this point. If this is temporary, the article goes on to talk about how you should be taking advantage. Maybe this is your opportunity. As listings for single-family homes come onto the market, Mr. Boyko is noticing the odd paradox that buyers move to the sidelines just as bidding wars calm down instead of taking advantage of the lull. Funny how that works. You buyers out there, if there's a lull, you guys were just getting so hyped up and crazy about the bidding war. Now things calm down. Like, I don't know if I want to buy anymore. As for sellers, he's recommending that homeowners with a pleasant garden or backyard pool, which we'll talk about later in the show, list during the summer months. That's your chance. Beautiful times. People want the pool, instead of a patio, maybe I could go poolside. Meanwhile, owners with an entry-level downtown condo should likely hold off. Quote, if you have a small unit that appeals to a first-time buyer, you might want to delay, he says. Right now, they're busy hitting the patios. They ain't looking for your place. In fact, rents are pretty sweet right now. We'll talk about that as well. But the truth remains, I think this quote is fantastic. Buyers only want to buy during a seller's market. Ironic. I know there's realtors out there like myself shaking your head thinking, guys, oh, I'm getting a listing, listings bump up. Where's the buyers? Oh, I got a buyer. Here we go. We're going to get out there. But you know what? They're not so interested. Prices are a little softer. Everyone's out there looking for a beer. Number 3, the working from home trend. Maybe the pull from the city is already slowing down. This is within the same article, Globe and Mail. John Lusick, president at Right at Home Realty, says, while a stream of people has moved out of the downtown Toronto during the worst months of the pandemic, Mr. Lusick doesn't expect the exodus to continue at the same pace. I know there's a lot of different opposing views on that, but they say a recent survey commissioned by Right at Home Realty found 63% of those surveys would not want to move further away if their employer required them to work in the office for any part of the week. So if you got to come in on Monday, the majority would say we want to be close to work. Funny how that works. But wait, so we don't love being in isolation? But this is Canada, where you get together with your family and smoke weed, and the only illegal part is getting together with your family. Reason number 4, seller expectations are sticky. I think this is a good point. And anytime we see this downtrend, you don't talk about it so much here, but when we were seeing major drops in prices and sales, I think this was more of a notable point, but I think it's starting to maybe rear its ugly head once again. This is from a Toronto Sun article. And this comes, I thought it was interesting, comes from a realtor's experience, this discussion with their client. Listen to this. I think it will resonate with a lot of real estate professionals. When I sit down at listing presentations, I present my opinion of values on a property. It is based on my knowledge of the current market conditions and a careful analysis of the comparable sales. And almost always, the number in the prospective client's head is based on an outlier, the house that sold down the street on day one with an offer 40% above list. You guys have probably experienced that. In fact, if you own real estate, you're probably hopeful your property will sell for top dollar too. Well, it's easy to get a listing if you promise the sun, moon, and stars. It's entirely another story to deliver it. And that is why we are now seeing so many listings fall flat. So if you hear how that kind of, I know I'm taking it from a different perspective here, but you're hearing how this process works. People don't just say, you know, I'm going to list my home. Oh, I can't get that much. Okay, I'm going to settle. No, they're holding those hopes high. They hold them high. Sellers have had a great run, and all signs point to the momentum continuing once things pick back up again in the fall. But the COVID-related heat that has driven the market this past year is likely behind us now. But that doesn't mean that people are willing to sell at a loss or a perceived loss. They will sit and they will wait until it gets unbearable to wait anymore. At some point, as long as it's possible, they're going to wait out. But at some point, they can't wait any longer. But if this is a short-term seasonal trend, who cares? Reason number 5, big money continues to pour in. I mean, I think there's a lot of people who invest their dollars based on successful people and how they invest their dollars. It's often a good leading indicator. Well, guess where people are putting their money? Real estate. The Globe and Mail had an article talking about Mattamy Homes, a Toronto-based company that became North America's largest privately owned builder by focusing on single-family homes, is now launching a dedicated high-rise development division on Thursday. Mattamy GTA Urban will initially focus on creating what Chief Executive Brad Carr calls, quote, vertical communities that combine mid and high-rise housing with retail, office, and public space in the Greater Toronto Area. So Mattamy is investing, which is a big statement for condos, by the way. Some would say Mattamy is the best damn builder in Canada. I say it's the Beaver. Reason number 6, the government is doing whatever it takes to protect housing. It's a big reason a lot of private companies are buying up single-family homes as well. Global News just published a YouTube video. Prime Minister Justin Trudeau announced on Wednesday that the federal government is pledging an additional $1.5 billion to create 9,200 new homes as part of the Rapid Housing Initiative. What I find interesting is there's so little news about that. I mean, you know, it's just like $1.5 billion. It's just 9,200 homes. But the government is doing everything it can. It's supporting housing. Why would we need affordable homes if homes will eventually become affordable on their own? There's a rumor the government can solve the housing crisis in Canada, but it isn't Trudeau. But let's talk about arguments for a decline. We talked about some of the reasons it could go up, which is typical of your local realtor. But let's discuss a decline. What could be a leading indicator of that? A new long-term trend could be forming. Maybe this isn't seasonal. John Pasala said last week was the first week in a year where home prices were down year over year. That is comparing against a 2020 COVID scenario, which is for the low-rise segment, given that as well. Of course, it's just 1 week, but I suspect, he says, we'll see this trend continue into the summer and likely into the fall market. So maybe it's not just a summer trend. Maybe this is a second half of 2021 trend. Major banks, reason number 2, anticipate a cooling demand. I saw this article talking about RBC Economics, Canada's largest bank, discussing that the Big Six expects the new building to slow down in the second quarter of this year and taper into Q3 2022. Over the past few years, Canada's been an explosion of new housing starts, right? This growth. I mean, this announcement of Mattamy, for example. There's a lot of them in the condo space. But the seasonal adjusted annual rate, the SAAR of housing starts in Q1 2021 was up a whopping 47% from a year ago. Over almost 50% increase from the last year in new starts, which was an unbelievable year. We'll give it that as well. But the bank has forecasted this number will drop in Q2, right now, 2021, down 15%. Interesting. Their forecast sees the decline in starts bottoming in Q3 2022. So we're looking into this time frame as we kind of roll into July. Third quarter next year will be that bottom. That's a downward trip, guys. That works out to a decline of 36% from peak activity in the first quarter of this year, and it's an extremely sharp drop. Next year, they're forecasting the annual number of new home starts will make a giant decline. Starts in 2022, they're expecting under 200,000, a drop of 22% from the estimates for this year. As we're talking about new builds, I thought it would also be worthwhile mentioning the free fall that is the lumber commodity market. Holy smokes. This is one of my kind of guilty pleasures. I love that with the cost of housing and expenses and all this is adding, just every so often, just seeing an update like today, over 9% drop from when I looked at it for lumber. And it's a fantastic thing. Obviously, it's great for the industry, kind of maybe creates an opportunity for them to either earn more money because we all know builders don't drop their prices. Moving on. Talking about builders and wrapping this whole thing up, luxury, right? A lot of people say, oh, luxury market's where it's at. Luxury is often the leading indicator of what's behind it. Well, guess what? Right now, fun fact for new builds, the most frequently purchased price range for new builds is between $300,000 to $400,000. This is across Canada. And you'll guess that it's not in Ontario. We don't have those around here. The luxury market for newly built homes is seeing a disproportionately large slowdown. So I guess Canadians are tired of getting killed by prices. Well, technically, it's happening around the world, just on a different scale. It's not just us over here. So if you commit first-degree murder in Canada, we know relative, right? In the U.S., it's 34th-degree murder. Reason number 3, the cost is just so high. I think this is a legitimate argument. I mean, I really do. I think people are just kind of, they're thinking this is crazy. This is crazy talk. We saw an article that came out talking about Canadian home down payment amounts. Guess what amount we pay here in Ontario? Before you have time to do that, it's $140,000, folks. That's your average down payment in Ontario. The average down payment is now approaching, this is Mike Moffat that posted this, what we paid total for our first house in 2004. He says this is bananas. It is bananas. In fact, some of you are probably old enough to remember you could buy a whole house in Ontario for that price, which would make you at least 2 years old. Whew. What I also thought was interesting here is when we look, because they did down payments across the country, they looked at other provinces. So we saw Nova Scotia was at 18.5%, Alberta was at 15%, and Quebec was 14.5%. Interesting that their down payment amounts are below 20%. But why would that not be the case here in Canada? I'll tell you why. It's why you're here. Scott Ingram said Ontario and BC homebuyers have the most incentive to reach the 20% down payment for CMHC. So house prices are that high already, plus you need 20%. Why? Because with 15% down, let's say you decided, I'm going to pay a little bit of the CMHC insurance. You know what? I'll put a little bit less money down. Well, guess what? It would leave with the whole amount at a 2.8% insurance rate. You'd spend over $20,000 as a one-time cost with zero value add. So people are saying, well, what the hell? You might as well just put the 20% down because the costs are so high. The amounts, the penalties, the percentages are that much higher as well. Reason number 4, why we could see things slowing down with the uncertainty, renting is looking like a safe alternative right now. I got an email from Live Rent. I get a lot of messages from them since I worked with them. They've been really helpful in sending us early data. Here's one of the things they've noticed. Average rent for furnished and non-furnished units in the GTA is the same. Wow. $1,670. That's for a one bedroom. Isn't that crazy? In some areas like North York and Etobicoke, unfurnished units are more expensive than furnished. So you could literally have a full unit furnished for less money than furnishing it all by yourself. In Zealand, talking about kind of the rental market, we like to keep track of where those are over the last week. We're seeing stability continuing, so probably for the last 3-4 weeks, actually. That seems to be pretty consistently not going up, just kind of floating, which is good, right? Enjoy it while it's cool, because as we're kind of mapping where rent rates are going to go in the future, if renting is something you're considering as you move back into the city for that job, which you'll have to do at some point in your life, Toronto Stories had an article that talks about this. After months of rent declines and a slump in demand, the Toronto area rental market is poised for a fall comeback. That's right, a comeback. Meaning prices going up, by the way. According to the report, several American cities, including New York, San Fran, and Chicago, are reporting strong lease-up activity over the past 2 months. With the Canadian vaccine rollout improving, the Toronto market might be only 2 to 3 months behind. So, there you have it. If you're studying in Toronto rather than other major U.S. cities, you'll save a bit of money these days. You've dodged a bit of a bullet. In fact, probably dodged multiple bullets. But with the borders poised to reopen, leading to a ramp up in tourism and students returning to campus, the office tower is expected to return to full capacity. Bullpen Research and Consulting, really the estimation is rent growth of 12 to 14% next year. Lock in those rates, get them while they're low, get it while they're hot. Let's start talking about our next topic. Where should I buy real estate in Canada in 2021? We're going to start off talking about an article, which I think is valuable. I love the Money Sense publication. Every year we track these. And so I think it's cool for us to see, to start out, where are there going to be opportunities? But from here, I also want to discuss where the movement has been. If you're going to leave Toronto, where are people going? Right? Because migration is often a good indication of where there's going to be price growth. So here's what Money Sense has to say. Amid the shifting trends, how should aspiring buyers approach the market? So they partnered with Zoocasa and they compiled a 2021 edition of Where to Buy Real Estate, revealing markets that offer the greatest value and potential for appreciation over time. Nobody needs appreciation, do we? Here's a little bit of a tip. Toronto came 39. We're not on the short list. I'm sorry. You didn't expect us to win, did you? You want to know why the Hockey Hall of Fame is in Toronto? So Leaf fans can remember what a Stanley Cup looks like. Well, who did win? Number one on the list today is Bancroft, Ontario. According to their Economic Development Committee, the town has enjoyed a 28% increase in job creation since 2011. Who would have thought? That's almost double that of the Ontario average. When it comes to prices, they've seen an 86.6 increase from the previous year as far as prices, and the listings have bounced back as 64.7% more homes came to market. Right now, they're sitting at a months of inventory at 0.7. Crazy. That's very low, of course. So that put Bancroft on the top of the list. People like those cottages, like to get away. Who would have thought? Number two, Woodstock. The unemployment rate at the time of the census was 5.2, which is below the national average at 7.5. So we got good jobs. We also have a lot of people moving there. And we have a lot of history. Remember, historics as an indication of future. Well, the average price index for all homes grew 19% over the year. That's in 2020. That's not this year. That's 2020. And it grew up a whopping, over the last 3 years, 67% leading up to that. However, as buyers gain the flexibility to work from anywhere, which COVID did, the city has been overwhelmed with interest. Their months of inventory right now is at 0.4 months of inventory, down from 1.8. And the average price in March 2021 was a record $650,000, which I know a lot of people are just like, oh, $650,000. Guys, that's a 38% increase since March 2020. Number three on our list, London, St. Thomas. Zoocasa's average price index reveals a price of $436,000. Again, sounds low, but it's an increase of 16% year over year. And it was 77% over 3 years. That was in 2020, but 2021 made things go up even more. Prices rose 17.8% with the sales to new listings ratio hitting 78.5, which is a massively strong seller's market. Now, this is what's crazy, guys. When we're talking about these are opportunities for you to buy in 2021, and yet here we are sitting back looking at what happened over the last year, the last 4 years, really, if you add in all the stats they've got here, just goes to show you that even though prices have gone up as much as 20%, in some areas 30%, doesn't mean that 2021 is going to be a calm year for these areas. And in fact, we see in London, they were also sitting in months of inventory at 0.4. That is just outrageous. It's absolutely outrageous. Meanwhile, as we said, people like to buy in a seller's market. They don't want to buy locally. And we see a lot of people in Toronto leaving the city. Where are they going? Where are they going? Maybe that's an indication of where there's opportunity. Well, we see Toronto and Montreal. There's an article here. This is from BlogTO saying they're moving to Vancouver and Halifax. We'll talk about the numbers, but people are leaving Toronto in record numbers. Even Toronto's Major League Baseball teams moved away, right? They wanted to avoid crossing illegally. Jaywalking. But where are they going? Where are they going? So they say this: small Ontario towns, cottages, and other GTA cities aren't the only places people are moving, according to new data from, who would have thought, LinkedIn talking about this stuff now. So where they're leaving, their workforce report for Canada, which analyzed internal migration trends nationwide, shows a huge number of people have moved away from Toronto, 12.2% drop, and Montreal, 22% drop in April 2020. But where are they going? Listen to these numbers. Vancouver had an opposite effect, increase at 10.5%, and in the last 15 months, and there was a whopping 39% increase for Halifax. Now, as a percentage, it's aggressive because the number is obviously lower, but these are where people are going. Why? Why go there? LinkedIn cites benefits such as access to the coast with its oceans and beaches, better weather, and a more laid-back lifestyle and career opportunities. Guess what? The West Coast was recently named the top location in the country for professionals to fulfill personal and professional ambitions. Really, in the tech and finance sector, we see a lot of growing industries, which have been historically really attractive in Toronto. Maybe that's a reason for you to up and go. But maybe you want to stay in the city, right? Because we're going to talk about what you buy in 2021. Maybe you don't want to run to no man's land. Maybe you want to stay local. Well, if you don't mind staying local and maybe even in the sketchy part of town, you know where the red light district is in Toronto, actually? Behind the Maple Leafs net. But if you want to stay local, what is the next best option? A BlogTO article talks about that today. Toronto condo prices are soaring for one specific type of unit. Guess what it is? Condo prices overall leveled off this month, save for the 3-bedroom unit, the big ones. Condos of that size, on average, have gone up 30% since March, from just shy 700 to 905,000 for numbers from Strata. Unbelievable. Why? Well, the experts at the condo sales website believe this is in part due to the slow return of people who left the city for more space at cheaper prices. So people are coming back and who want to continue enjoying more space here in the city. I got to go back, which doesn't mean I got to hide in a hole. So they're trying to get that balance. So looking forward, agents believe, in this article, they believe the interest in 3-bedroom units will only continue, with inventory levels falling and forthcoming demand from students and other renters as things continue to open up. That also goes for the rest of the GTA. They say the rest of the GTA 3 bedrooms have gone up, but not nearly as high a figure as in Toronto. But when I think about this, the first thing that comes to mind is there's really not a lot of 3-bedroom units in condos in Toronto. And I think that's a big part of it. It all kind of falls under this missing middle category that has been really tight, not talked about as much lately, but has been really tight over the last several years. So we're going to have people in Toronto whining about losing out for years to come because of the lack of supply. But you know the difference between the Maple Leafs and a 14-year-old girl? Speaking of crying, nothing. They're both just waiting for the first period to be over. All right, let's get into some hot topics. If you haven't at this point in the show, please like and subscribe to our channel. If you're suddenly a Tampa Bay fan, that's a good opportunity for you to do it. But unless you've got a map of Canada tattooed on your butt, every time you sit down, Quebec separates. Okay, enough reaming Montreal. Go Montreal, right? I saw a advertisement on Scotiabank for Montreal Canadiens. I'm like, well, that's a quick way to divide the country. But BlogTO, our first article for our hot topic today, one bedroom Toronto condo listed for, get this, $670 million. Who wants to buy a $670 million unit? Obviously was a typo, but funny news nonetheless. They reset their price, but you can still go on today and see that they had listed it for just under $670 million. Anyways, we also got an email along this note of false advertisement. We got an email from TREB. Actually, this wasn't an email. This was one of their kind of like, they like to have postings, right? They want to keep us informed. But really the discussion was to stop making immaterial changes. I thought this was interesting. I'm going to read it to you. Making immaterial changes to a listing so that it appears that the quote, today's listing feature is an attempt to circumvent TREB's MLS system and a violation of the rules set out by TREB. You can receive a professional standards complaint and face a fine of as high as $5,000 if any of these updates are done without the request forms. So what would be an example? You go in and, I missed a comma. So you update a comma. Well, Scott Ingram made a post here on Instagram or on Twitter. I wonder why TREB is only making a point of mentioning this now. Check out the crazy example that was given. So they had one example here where there was somebody who made 50 immaterial updates to two listings on one listing, like one property, two listings, and they were fined a grand total of $500. So it's really, that was obviously a slap in the wrist. But he also posts here that there was a minimum price that he suggests, and I think it's a good idea that you have a minimum price change required if you're going to make a price change. The reason is, and all in the name of the kind of today's matches type of scenario. What is that? Maybe I should give a little bit of context. When you're set up to receive auto listings, you can set it up to receive things that appear or have a price change or some kind of adjustments. They pop up in your email if you kind of had that as a criteria, which is thousands of eyes. And so people will make these little changes in an ongoing way in order to have that listing. It's good marketing. I mean, am I not trying to work in the interest of my seller? Well, when you have someone have a listing he had an example here of 3.149 million, and then you relist at 315. So you literally just changed it by $1,000 and you've got yourself a new email being sent out. So if I'm going to drop my price by 5,000, why not drop it 1,000, 1,000, 1,000, 1,000, and I'll be on your news feed all week long. A good point, and really something that should be monitored. And that's really what's going on in the backside of TREB. So we also saw, speaking kind of along lines of being, oversight, there was today, July 1st, kind of today, Stories.com announced new code of ethics for home builders. Home builders are being treated very aggressively right now. It's the first in the province that home builders have had a new code of ethics. So there's clarifications to the simplified warranty and protections claim processes for defects in new homes, as well as a mediation program for homeowners looking to dispute on warranty claims. So they're kind of giving all of these, but really it's about treating people with some kind of dignity. That's kind of what I'm hearing. I mean, listen to this. The code will require licensed builders and vendors of new homes to operate in a professional manner with integrity and financial responsibility and honesty and without intimidation or coercion. I mean, what more can you ask for from a home builder? Then we've got, moving on, we're going to talk about some of the household debt. We're just looking at some of those numbers. I like to keep track of it. Better Dwelling posted that Canadian household credit reached a new high. In fact, in April, it was up 0.79% in a month. It reached just under 2.5 trillion, 2.48. Over the last month, there's been an increase by 5.3% in debt. That's crazy. It was the highest rate of annual growth for household credit since 2017. But what's also interesting about here is, what is the debt on? It's on mortgages, almost exclusively. Mortgage debt is now 68% of household debt, the largest share since the 90s. And in perspective, consumer credit, which is all non-real estate lending, it's not growing nearly as fast. That's only up 0.46% over the last 12 months. So you can see the heavy lifting is coming from the real estate mortgage side. We only really spend money on housing around here because it works. It works. You think Canadians would invest in something like space exploration? My goodness. I'll believe it when you show me the moon, eh? Moving on. Talking about office vacancies. Vacancies, right? Offices are getting clobbered. That's kind of the short of it. Second quarter office vacancy rate in downtown Toronto was 10%, up nearly a full percentage point in the last 3 months, the first 3 months of 2021. And that is the highest it's reached since the start of 2008. Obviously a fun year in our memory books. But when we look at what's coming in the future, Times Colonist was talking with CBRE about what their forecasts are for the commercial real estate market. Well, they say Canadian commercial real estate is pointing to a post-pandemic economic upswing. So we're coming back from an upswing. Yes, that number is low, but there's more upside to come. Downtown office leasing increased in major cities by the smallest amount since the pandemic onset last year, with office tenants preparing to welcome employees back in the second half of the year. It'll be interesting to see if, in fact, people go back to work and offices fill in the second half, in the later part of 2021. Let's talk about whether or not we are preventing sellers from selling. I think this is important because this whole concept of moving up the property ladder, you got somebody buy their first home, they move up, they get something a little bit bigger, they move up again, and then they eventually downsize, all of which creates space for that next person to buy a property, creates the flow. Well, today I want to discuss an article that's called Homebuyer Gridlock, 25% of Canadian real estate sellers can't afford to sell, according to Zillow. We've got a 401 style gridlock happening in Canada right now for sellers. I really don't understand why people like traffic jams. I mean, apparently they line up for it. So Zillow Canada commissioned a new survey via Ipsos on buying and selling real estate. So this wasn't really a big component of their research, what they showed. Like there was never a lot of spotlight pointed at this, but I thought this is worthy of a segment because I think this could be a big problem we have in our local market that's, it's causing this gridlock. A quarter of homeowners ready to sell haven't listed because they can't afford to upgrade. Affordability. So affordability is not just a crisis for the first millennial, for the entry level. In fact, I've seen a lot of articles now talking about the battle between millennials and boomers and this kind of like the downsizers, and there's conflict there. There's conflict. It happens at every level. The result is a buyer's gridlock where people are, quote, locked into their situation. All the traffic lights have turned red in Toronto. Can you blame them? Right? You would too if you had to change in the middle of the street. Homebuyer gridlock. Most of you already know when the property ladder is, but what is a gridlock? What does that mean? Well, it happens when one of these groups can't afford to make the jump at any level. If you've got a space that's too wide, if the gap becomes too big between the starter home and the mid-tier, one grows too large and the starter homeowner can't upgrade. The problem is if the starter homeowner doesn't upgrade, the mid-tier owner can't upgrade either because they couldn't sell their home to that person. And there you go. When things get really bad, there isn't even a suburb to flee to due to the flattening prices. This results in everyone being, quote, stuck in place like they're in gridlocked traffic. I think it's a very wonderful description. No, it's not a good thing, but it's a good description and understanding of what is happening. So here's the spiral. If a starter homeowner doesn't sell, the first-time home buyer can't purchase. This forces them to look further out from the center of the city or compete with a smaller pool of buyers. This drives home prices higher, in either case making it even more difficult for you to sell. In conclusion, fewer people are moving, placing more pressure on home prices. Maybe sales activity is slowing down because sellers are just stuck. Could that be the reason? I think it's definitely contributing. That, or the only thing more addictive than mortgage debt is stealing traffic signs. Because we can stop whenever we want to. But I thought this was kind of a good way to explain it. So I'm going to read for you how they describe this. 1 in 4 sellers have put off listing their home since they can't find a new one. So all of that challenge that we're experiencing on the buying side is really hurting us on the selling side, which spirals into this circle back on the buying side. So it shows 29% of homeowners see low inventory impacting their decision to buy, sell, or move. This results in a lot of people staying in place and sends well-heeled first-time buyers into bidding wars or to other regions, which we've experienced. Rather than an orderly flow, everyone is stampeding for the same few units. So how do we fix it? How do we fix this? What's the solution? A real estate market with low inventory produces a market with even less inventory. This is partially why price corrections tend to see so many sellers all of a sudden. They don't need money, but they can finally sell and take some of those gains off the table. So prices are going to come down. Finally, there's buyers, a place for me to go. I know prices are lower where I'm going, but they're also lower where I'm selling. But I'm okay with that because I can get some capital gains, get my primary residence exemption. I'm happy. I'm off to the race as well. Once prices fall to a level where starter homeowners can afford to upgrade, they do. So all of a sudden, we got this platform where people can buy again. You know what? I've got an opportunity to go. Prices come down. So it frees up starter homes and keeping the system working. Ironically, falling prices, not the only solution, but this is the one they're offering. Falling prices can create more inventory, and that could essentially fix the problem. In the meantime, what should we do? What is a Canadian to do with a high price and they can't afford to move? Well, maybe we should renovate. Maybe we should update our home. And I thought this was kind of a good opportunity to talk about this possibility of a pool. Does a pool add value to your home? Maybe you're wondering. Well, apparently, quote, demand for pools has been double or triple than it was pre-pandemic. This is talking to Jennifer Gannon, owner of Toronto-based Bonavista Pools. And so talking to Jessica England of Baldwin England Luxury Real Estate. So on the real estate luxury side, we see a lot more of the pools, at least it is in Toronto. So it's a good place for us to do it. But the only real way, she says, that you experience a growth because of the cost or increase in value of property due to having a pool is only if the pool, is in the city of Toronto specifically, you're no longer allowed. Backtrack. Losing myself here. I want to make sure we're on the same page. In Toronto, the only platform she gives where you're actually guaranteed an increase in value is on a ravine lot. That's what I wanted to say. Well, the city of Toronto no longer allows pools to be built on these properties. Did you know? Funny how red tape can do that kind of thing. However, any that have existing pools are considered exempt from the rule. They're grandfathered, so to speak. For this unique reason, this England chick says any existing pool on a coveted Toronto ravine lot adds to the home's property value, and the associated price would be roughly $500,000 depending on the location. So for other homes, what about for those of you who don't have a increase in value of on a ravine lot property with pool in the back? Well, for the rest of us folks, this common folk, an increase in home value isn't always guaranteed. However, experts generally agree a pool can add a value to your home equal to 7% of the pool's cost, but not always. Tend to think that with COVID that's a little bit higher, but that's the news. That's the number. So can we blame people? Not only can they not afford the value increase of a pool, but they're gridlocked. They're stuck. Prices in Toronto remind me of Mexico and Canada. It's bordering on stupidity. That was mean. I take that back. I take it back. The U.S. is actually the U.S. has one thing. It has one thing on Canada. They have nicer neighbors. Hope you guys learned some stuff today. As I like to, I'm going to share one of our reviews we've got. And if you guys could leave us an iTunes review and a 5-star rating, really appreciate it. Today comes from MDAR13. It says, love this podcast. Saves me so much time from having to sift through all the news myself. Appreciate the stupid jokes. Refreshingly unpolitically correct. You have no idea, man. No idea how unpolitically correct. I'm walking some fine lines around here, man. Today I had a joke about, because it's Canada today, I had a joke about a Canadian moose limbs, but playing it safe. I hope you guys enjoy the lightheartedness of our show. Please leave us a 5-star rating review, and there's no reason to be upset. In fact, today's Canada Day, so smile. What are you, a maple tree? All sappy like? I'll leave it there, and I'll see you guys next time. Take care and keep it real.